Hey everybody, it's your realtor here from eXp Realty. I'm sitting here with Mark Glazewski from Taxxguy. We're enjoying some coffee at the Ambati restaurant in White Plains, and today we're going to ask Mark a question related to taxes and renting. So Mark, I wanted to ask you, first of all, thank you for making this time for me and for us. I wanted to ask you, what is the tax benefit for homeowners who want to rent their space in an additional apartment or so?
Okay, well, renting is one of the great things, or one of the few really great things we could still do to get some tax advantage. When you rent a home, you get to depreciate the basis of the home for 15 years. And basis is what you paid for it, all your closing costs, and any renovations, all of that adds into your adjusted basis. That gets depreciated over 15 years. So for example, if the home adjusted basis is $250,000, you have $16,667 per year that you can depreciate. So that's basically a non-cash expense. So let's say that you rent the home and that your rent exceeds all your other normal expenses by about $5,000. Even though you have $5,000 cash gain in your pocket, you have a tax loss of $11,600 and change. And if you have an adjusted gross income for your entire return of $150,000 or less, you're allowed to take up to $25,000 of that loss that year. So that could actually reduce your taxes. So in that situation, you might have $4,000 in tax savings. So not only are you gaining $5,000 in cash, you're saving $4,000 that you're not paying to the IRS, in our case, New York State. If your adjusted gross income is more than $150,000, you're not allowed to take the loss. However, you could roll that loss forward, and that does a lot of things for you. When you sell the house, hopefully the home's appreciated. At that time, you could recapture all the rollover losses. So for example, let's say you've been rolling over losses for 10 years, 15 years. You might have $100,000 in losses. Wow. Now you sell the property, you make $100,000, you offset it by those losses, you basically have a tax-free gain of the sale. If you sell the property for whatever amount, you could, let's say you don't have any capital gains, which isn't going to happen. Let's say it didn't sell for more. That accumulated loss comes right off of your income. So I've seen some very high net worth taxpayers that are used to paying $50,000, $100,000 a year in taxes, and all of a sudden they have a $300,000 tax write-off because they sold the property and they have this tax windfall. Wow. So and obviously, as you could talk better than me, the property tends to appreciate.
Of course.
The last thing I wanted to mention is that let's say you have a home that you're renting. And let's say that home has crazily appreciated. Good example, co-op in Brooklyn. I know people bought co-ops for $200,000 10 years ago, and they're now worth $2 million. So let's say you have a rental property like that. You're looking at almost $2 million in capital gains.
Sure.
What you can do is move into that rental property for 2 years, has to be at least 2 of the last 5 years. You reestablish that as your principal residence. You turn around, you sell it, and now you have a tax exclusion of $250,000 for if you're single, or if you're married, $500,000 tax exclusion.
That is amazing.
So
that is
renting a house is the nuts.
That is amazing. Wow. Just moving in for 2 years, establishing that as your primary residence and saving a whole lot of money legally from Uncle Sam sounds like a win-win for me. Mark, how can my homeowners, buyers, and sellers reach out to you if they have more questions, if they need more help?
The best way is mark@taxxguy.com. That's Mark with a K. Taxxguy is 2 X's.
Taxxguy, TAXXGUY.com, and that's also the website, taxxguy.com with 2 X's, right?
Yep.
Thank you so much, Mark. I really appreciate
all right,
this
Ish.
time. Appreciate it. Thanks for watching, guys.